David, great to have you to start the hour. Appreciate it.
Hey, Carl, how you doing?
What's the rationale behind the Meta buy?
Well, again, we think this business model is very durable. It's certainly been through some tough times. The stock's been just slaughtered. And I think at the valuation down here, if you're a bear on the stock, I think you have to really make a case that the business model has been disrupted. It can't grow. That these share buybacks, large share buybacks down at these valuations, which are at free cash flow yields that are very accretive, you have to take apart all of those elements of the story, at least in our minds, not to own Meta. And again, as you mentioned, we recently bought it, we've suffered through it, and it's now our largest holding.
Right. Are you more interested in the long-term play of metaverse and reality labs, or is it more a function of, if we are going into a dramatic slowdown, that advertising the way it's targeted at Meta is something that corporates are going to try to spend as much as they can?
Yeah, that's certainly the number one element of our bullish stance. Everything else that you had mentioned, that's on the come. Hopefully they don't spend too much on that, but I mean, it's one of the best advertising platforms out there. And as you mentioned, as advertisers rationalize their spend, I doubt that they're going to cut too much from Meta and even Alphabet, which we also own.
Yeah, we're looking, David, at a list of your top holdings. You've got Meta first, Alphabet second, and I guess what you're laying out right now is you like the advertising story, but with increasing worries about that macro picture, the likelihood of heading into a recession, ad budgets, marketing, that's typically the first thing that companies cut. Do you like these because they're better insulated from those forces, or because you think that maybe the macro picture isn't going to be that bad?
Perhaps a little of both. Again, certainly if we do head into a significant recession, if the Fed breaks something as they enter quantitative tightening, they're going to get hit on those budgets. The good news is that these stocks are trading at PEs of 30 or 35 or 40. And so, again, when we consider the risk reward for each of these companies, we like what we see, and therefore they're our two largest holdings.
Yeah, so David, we've been talking a lot about the mega caps. What about some of the smaller, more speculative growth stocks? Dom Chu was just talking about this, that have sold off so much and might represent some value here. Are you fishing into some of those names yet?
We pretty much avoid stocks that don't generate earnings. Interestingly enough, in your previous segment, one of our larger holdings is Taiwan Semi. It's not part of the S&P 500 or the NASDAQ 100, but as he went through that screening, that stock would probably qualify as well. So we're big fans of the semiconductor space. Our favorite is Taiwan Semi. You don't see it in a lot of growth portfolios. It's not in a lot of indices and ETFs, but without TSM, the likes of AMD and NVIDIA and Apple, I mean, the world revolves around, at the very high end, TSM. We think it's probably one of the most powerful, under-owned tech stocks in the space.